The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. We're going to have Rich Anderson on this morning early to talk to us about the oil market, and then we'll have Norm Winsky from Astro Trends will talk to us at the half-hour break. We'll start out the show like we usually do, looking at the DAX and also the FTSE. You know, both of those are actually holding up relatively well. And, of course, we're down a little bit today. We were down, about 500 yesterday, and it looks like 500 or so today. Maybe just a normal correction. This we don't know. But the news, of course, is just being really hammered with the what's going on with the thing over in Singapore. Folks, the fact that it's gone negative is a very, very unusual thing, but the contract is set up that way, and Rich will cover that, so we'll go into it. The folks that that have caused all this, and believe me, this is done for one trader. Let me show you. This was done by one trader. Here is the open interest. Remember, we looked at the open interest yesterday in the crude oil. Here, that the May crude oil, this is the last day, it still had 15,000 contracts open. That's 15 million barrels of oil, and they've got to put that oil somewhere. You see it dropped 92,000 contracts yesterday. That's why it went negative. You see, folks, well, stop stuttering, Larry. Shut the front door and raise the rent. You folks can't get involved with something like that because the reason why in the United States here, almost every single firm at the Merc will not allow you to trade those last 3 or 4 days of contracts like this. Do you know why? To protect you from something like this happening. What's happening, this young man, oh, hey, we got Rich on the line now. Rich, are you there?
I'm here.
All right. Hey, good. Rich, can you give us the real skinny of what's going on over there in Singapore? Because there's so much fake news out there, no one knows what to believe. But you and I chatted yesterday, so why don't you give us your 2 cents worth and let us know what you think, okay? Go right ahead.
Well, as you were saying, this is the reason firms don't allow you to trade in the spot month. And typically, if you do, you have to have close to full margin available. But if it goes below zero, full total contract value, if it goes below zero, is more than total contract. We've never seen this happen. And there was a big trader in Singapore that was long a bunch, and everybody knew he was long a bunch, and so therefore there's nobody to buy. And the key point is that short term there's inelasticity. And this is dislocation and disruption in the price. It's not unlike a couple of weeks ago. Remember, you asked me about the gold, and gold, the spread had widened out to $31.50 in the roll, and it should have never been that wide. Well, these are just actually net results of what we're going through with the shutdown around the world, because it's reduced the demand for oil by 30 or 40%. You had the OPEC Plus come to an agreement to reduce the production, and so then everybody goes into the oil market. I think the USO, I heard there was like $1.5 billion or more that was, increase in the open interest, what we would call open interest, of the USO, which is an ETF on crude oil. Well, those people are getting smacked around. When you have a market in contango like this, and the front month is so much cheaper than the back, well, as an investor, you've got to go to the June. And the June is likely to come down to where the spot is. Well, obviously not below zero necessarily, but it's a low probability way of making money, let's put it that way.
Wow, that's really...
So you have the ETFs that are rolling. You've got this big trader in Hong Kong, and he's backed by 10 different banks, and they think they've got more than enough collateral, and then you see something go below zero by a bunch. I mean, yesterday at one point, the June May spread was up to $57 difference.
Wow.
So if you actually had some storage space, you could have bought the May and sold the June, and sure, you got a little transportation and stuff like that, but you'd have made a fortune. This is just an example. The gold is another example of how people have to know what they're doing. You have to read the prospectuses if you're in a ETF. You have to read if you're going to play in the delivery month, you sure as heck have to know the delivery requirements. Like I was telling you about gold, it was plus or minus 5% is what the delivery. You aren't necessarily getting 100 ounces. Mm-hmm. This disruption is going to ripple through all kinds of markets before we're done with this lockdown and before we have some solutions to this coronavirus. I mean, I know how little I've driven my car, which is none in 6 weeks. Mm-hmm. The airplanes aren't flying. It'll mm-hmm. take time and it'll get adjusted. But right now there's no storage space. And so delivery, the futures contracts, you have to put it in a storage and there's none to have. So that's what happened. It's just pure dislocation. It's a temporary phenomenon. One guy in Singapore apparently got hurt bad, but the ETF hasn't exactly done well either.
Yeah. Rich, one of the questions we have is when the person that is long and the market goes negative, is he held responsible for that $40,000 difference?
Yeah.
Wow.
You're held responsible until you offset your contract. Absolutely. Mm-hmm. Because when you buy that contract, you've assumed the risk that you're going to take delivery of that barrel of oil, but that barrel of oil is sitting in the ship, and you have to have a place to put it. Otherwise, you're going to start paying to merge, and if you have no storage to put it. So I would say yes, but I'm sure, I'm sure good attorneys could argue otherwise, but mm-hmm. the way the contracts are, if you buy something, you're assuming risk until you sell it. So you offset that contract, and vice versa. If you sell it, you're assuming risk until you buy it.
Rich,
disruption is not just in oil. Look at in the hog and the cattle industry. We're not able to process the cattle and hogs because the plants are getting shut down. We got all kinds of stuff backing up. I mean, it's rippling through the whole economy, and it's not just going to be oil.
Mm-hmm. Question is, if you were short oil and it went negative, that 40,000 would have gone to you, correct?
That's true.
But again,
that
you had
flash crash in I think May of 2012, where they came back and they said, all of a sudden, well, we're going to erase all trades below 30. Who knows what the exchange is going to do? I mean, we're probably meeting on that last night. But if you don't make a contract good, then it disappears, i.e., potatoes.
Yeah, that was so Simplot. I remember many years ago. He destroyed the market himself because he reneged on the contracts. Rich and I were talking,
you've
folks.
You've got to have a contract that you can respect and can know that it's going to be good.
Rich and I were talking last night before he came on the show here today about what happened in 1972 with July corn when Bunge was short and it moved $3 a bushel in a matter of about 4 hours, and I happened to be in that. I got out at the first $1 a bushel, and it went up. That high lasted for about 10 years, didn't it, Rich?
Yeah, it's unbelievable.
Yeah. Hey, listen, thanks for joining us, buddy. Have a great day. We'll have you back again soon. You bet.
Well,
877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I'm going to bring to your attention what happened in 1975 when Nick Leeson, the Singapore trader that took down the Barings Bank, that was the Queen's Bank, been in the family for 250 years or something. But if you notice here, it was on January the 17th, and you notice the market had already been going down, and Leeson had been hiding positions that he was short, which we understand now there's a movie about it called The Rogue Trader. But he was short that, and he was really hiding what his losses were, much like what this young man was doing from Singapore. He's the son of the person that owns this. They own about 23 banks, I was told, and they hold a lot of real estate. So it looks like it's going to be about a $4 billion hit by the time it's all over. But anyway, here's what's happened. Here he is. He comes in, and I don't remember if it was a Friday or whatever, a Monday. I don't even remember what it was on the 17th. But he comes in that day, and he's short, and he starts adding to his position to average down. And then the Kobe earthquake hit, and that took the Barings Bank down. It just absolutely had a drop. We dropped from about 8,000 down to, or no, I think it was about 9,000 down to about 8,000 really quick, and then in the Nikkei, and that destroyed it. And you can see the market didn't bottom until July of 1995. He's trading against the trend. Folks, the reason why I'm bringing to this attention, not to the fact that, he made some mistakes, everybody does that. But, Roy Longstreet's got a little book called, what's the name of that book? I got it here. It's on my other desk. Anyway, he's got some rules in there. And he says the first mistake teaches, the second mistake kills. His first mistake, he was wrong and he didn't do anything about it. This one that killed him was he didn't get out of the position or even use a stop. That's why if you're trading in these kind of markets and you're not using a stop, you deserve to lose. You flat out deserve to lose. That's just being silly. Because if you don't use a stop, what you're doing is you're telling the market, yes, I know more than the market does, and we already know that doesn't work very well. So, put a stop in, even if it's a disaster stop. If you don't want to put the stop in the market because you worry about them people searching for it, which is total baloney, put a desk stop in. But they don't fill desk stops, and sometimes by the time you get to your desk, it could be 7, 8, 10, and with crude oil, it could be $10,000 away from where you are. So the good part is there's going to be some great values coming in here because we have gone just from $69 a barrel back on September the 13th, and here we are. We got down to, let's just call it $11 because that's what the June went to last night. So we've gone to $11 a barrel, and if you remember, about 3 weeks ago, the Saudis and the Iranians and the Russians were arguing about it, and the price of oil in Saudi Arabia was selling for $10 or $11 a barrel, and that's where it went to. And now they've got 6 large tankers, which is roughly 3 million barrels of oil coming to the United States, and there's no place to store it, folks. So, you're going to see gasoline prices probably close to $1, quarter of a gallon, to get rid of some of this stuff. So that's what we're sort of looking at right here. As you remember, when we came in here, and this was, from a long time ago, we were looking for a prediction in the oil at around $12, $11.31. That was this was the May oil. Of course, May went minus 41,000. Boy, I never thought I'd see anything like that, but that's what happened. But this will all be rectified today when May goes off the board and June will start trading normally. So 1131, what I was looking at on the longer term weekly, if that means a whole lot. We haven't been to that level since 1999 in January. In fact, when Rich and I were talking last night, we were reminiscing about some stuff, and he reminded me, he said, I came and stayed with you for those 2 weeks when we were doing that seminar with all the folks from Tucson with Mark down at the house there at the it was really something. We had it at the community center here in our neighborhood. It really was nice. We had about 20 people, and we brought in a big screen and everything. It was really a lot of fun. But he had a good memory of that stuff. But he and Mark were very close too, so it was really going to be seeing. Talking about earnings for Netflix, folks, the way it's going right now, it's I don't think earnings mean a whole lot, but people are still, they're playing the earnings game, so that's okay. One of the other things that someone asked me last night was why I was so bearish over the weekend in the letter. Folks, I tried to explain to you several times the fact that all of those FANG stocks looked absolutely negative, in my opinion. And, of course, the one that was the most was, of course, the Apple. And that was 287 was a number. We're about $10 or more under that right now. But that was a 135 pattern. And that's it. So that's one of the things that you're looking at. So anyway, that's the name of that book by Roy Longstreet, his Viewpoints of a Commodities Trader. And talk about silver. Yes, I'll be happy to talk about silver. I think I got it right up here. No, I don't. Yes, I do. Yes, I do. Yes, I do. Okay, let's get the silver up here. And I think the silver's right here. There we go. Get the silver up. This is the one we talked about in the newsletter on Sunday, and also on the videos that we've done. Yeah, you'll notice here we had the ABCD pattern. It looks like we're heading down to 14. We're down about $2 from the high. Remember that high now. That high up there at 1610 was a 61% retracement on the daily. Remember, we're making 1.618 expansions in gold and a 61% retracement in silver. That's telling you silver was relatively, bad. But that's or not bad, but whatever. Okay, let's look at silver for just a second, folks. You see the first Gartley there on the 16th. Now, this is an hourly chart. That is an absolute perfect ABCD pattern. If you want to, prove it to yourself why they work that way, is look at the left shoulder, look at the head, and look at the right shoulder being lower, okay? And that's a sign that it's bearish. Also, the time between the left shoulder and the head and the right shoulder is equal. That's a perfect technical description of a head and shoulders pattern. And the price objective on that would take you down to about 15 and change. But then you have another Gartley in here. And when you get to that Gartley that we had yesterday, that is nothing more than a 135 pattern, with the 1 being on the 14th. The 16th is the 3, and yesterday was the 5. It's a 135 pattern, and it's coming in, right at a 50% retracement of the whole move, and that what gives us a target of 1456. The metals are flat out looking bearish, folks. There's no other way to look at that. We'll be able to see what's going. And the question from Dan is, what happened to people that were short oil? Well, those folks, Dan, first of all, that's the May contract. And like Rich said, in order to be in that May contract, any of the Chicago Mercantile Exchange firms that are out there are pretty solid. There's a few of them, that are iffy-diffy, but they would never let their customers get into delivery months where those contracts have those things. They've been doing that for years. Your firm will absolutely say no trading. In fact, if it's on the platform and you try to put it in, they won't let you do it. So this is only one or two people that are causing all this. That's what the big brouhaha is. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I hope we have Norm Winsky on the line. Norm, are you there? Well, looks like we have some technical difficulties with Mr. Winsky today, so we'll keep moving on here till we get a hold of him. Hold on here. That might be him Skyping in. It says nobody's answering the phone at TFNN. Try again, Norm, please. Hopefully he'll be able to get in to see if it's doing here, get it working, and we'll work from that. That's about all we can do. So let's move on. Yeah, he will be on, hopefully. I mean, he's there. For some reason, we're having a few little technical difficulties, but we'll be able to have him on, hopefully. Gee, I wonder if I called him on Skype, if we could hear him. Well, things are not working the way we want to, so we'll just move on here till we try to get him on. And if we do miss him, we will have him on again probably on Thursday, which is the day of the new moon. Now, tomorrow we're going to have Stan Harley is going to be our guest. And then on the 23rd, we'll either have, I think we've got Norm's charts are up, but hopefully we'll see whether it's going to be working or not. I'm not absolutely sure how that works. So,
hello, Larry. Can you hear me, Larry?
Hey, looking good, Billy Ray. Feeling good, Lewis. Nothing like a little technical delay to get us started. Norm, go ahead and take the mic, my friend. Everything's set up.
Okay. Thank you very much, Larry. Thanks for having me on. So I thought I would review what I said back on, I was last on your show on April the 3rd. And one of the fun things I thought I would do, I would share a little experiment with your folks, see if we could forecast the numbers for the virus, the big virus, the COVID-19, also called the coronavirus there. And so I gave you a link so you can track the numbers. And I gave you these dates based on the planets. So we had the looking for a possible momentum peaks here at these dates. Had the weekend, I had a big, huge cluster of things happening over the weekend of the 3rd, and with also the Jupiter aligning with Pluto. That's a 12.45-year cycle. And so we'll be looking at the chart here in a minute. Then we had these other, you might want to take a screenshot of this page, and so you can follow along, right? So there we go. I'll give you a few seconds to get your screenshot cameras out there and take a picture of that. And there we go. So then I will now move ahead. Here's the link for the what the White House models, some of the top forecasting models the White House has been using. And so here's their plot there from that website there, if you want to take a screenshot of that. That's what the White House has been using. And there's the plot there. It says that April the 4th was a little momentum peak there. Then you had the 7th. I had that data, those two dates up there. And then the most recent peak was the 15th, which I did not have that date. So I don't know how to explain that. And then we got some more things coming up here. Now we're also going to be looking, of course, at the commodities. Most of the stuff will have to do with the U.S., which relates to what we call the U.S. natal chart, what the planets were when our country was founded on July the 4th, 1776. We had the one big thing in the sky there with Jupiter aligning with Pluto, which is cocoa, hogs, and T-bonds. And also because it's in the sign of Capricorn, we'll be looking at coffee. So now I'm going to move ahead here now to the different markets. We also had a full moon at perigee later that next week. So there we go. So here's your cocoa. There was our big window there, the weekend of the 3rd. Cocoa was going absolutely sideways until that weekend, and then all of a sudden it broke out to the upside that weekend. So that was kind of interesting. Here's coffee, made a beautiful low right there. If you bought it on the opening of Monday the 6th, you would have been a happy camper. There you go. See that? Here's corn, made a little bit of top right there on the morning of the 6th. That was our. And the way these work is, if you have a bunch of stuff over a weekend, look for the trade to be on the opening, that Monday's opening. That's what we had a lot of these. There's gold, made a little bit of low there on the for the full moon on the 7th. And there's your hogs. This was the problem. Larry, this is my pigs de resistance. Okay. The hogs found their trough there. Remember when we were talking back on Friday the 3rd, and we were both talking about the hogs were crashing and looking for a trough, and there it was. There, as they say in French, voila, right? Eureka, whatever. So they opened the lock, as you might remember, they opened lock limit down on Monday the 6th. They weren't there very long. I think it was maybe a matter of seconds or maybe a minute maximum. And then over the next 21 minutes, they went straight up. 7 1/4 handles, $2,900 in 21 minutes. So if you bought that opening there, you would have been very happy. Okay, so there we go. And here's your silver. Silver was kind of going, that was kind of a foggy, not a clear signal there, whether it was a high or a low, so I would have just skipped that one. And same thing with the beans, we're just going sideways. I don't like sideways. I like Newton's law. For every action, there's opposite equal reaction. So we're looking for things like we don't get these very often. This is a big extreme here where the hogs are crashing, but if we get a little extreme, that's okay too, because you're not going to get much reaction if you're going sideways, right? So we need some action so we can get some reaction. Here's the S&P had a huge 5-planet event signal there over the weekend of the 3rd, and we had a little downtrend consolidation going there into that weekend, and then we broke out on the opening of the 6th and went up. That was a miss there. They didn't care about the full moon very much, and a little bit of a pullback there, I guess. And then you had a couple of planetary events there over the 8th and 9th, and did make a little bit of a 1 to 2 day short-term top there. T-bonds were very good on the over the weekend of the 3rd. Had 5 things indicating a change in trend there, and we did make a nice top there. And we also had these green arrows here, so the T-bonds worked fairly well. We had a low do that, a change in trend there, made a low, it popped up, made another high there. So the T-bonds worked very well. The U.S. dollar not quite as well. Also, over the weekend of the 3rd, we had the dollar making a top. That was pretty nice. That was, I think, the high of the month. And then we went down here, and these guys there didn't work so well, so that's why I got those red arrows there. Here's the week going just sideways, so I would have just ignored that, skipped that one. Here's now we're into the currencies, and there you go. We're making a little bit of low there near the full moon for the pound. It's even clearer, I think, for the euro. And the Japanese yen is probably the best of the currencies there, foreign currencies, and you're making a low there, and then you went up, up, up. And here's my day trading. I thought I would give you something that everybody can look up. I give you a link here at the top of the page. This is, if you go to this website, it's a lunar calculator. It will show you all the perigee, apogee points to the minute. They are all stated in GMT, Greenwich Mean Time, so you'll have to adjust for your time zone, but it'll give it to you to the minute. So this is objective scientific stuff that yesterday the moon, and if you don't know what apogee perigee is, the moon is going around the Earth in an elliptical fashion. So there's a point every 25 days where it gets closest, and when it gets the farthest. And are we going to a commercial now, Larry?
Yes, sir, we are. We'll be right back. We have to pay a few bills.
No problem.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Norm Winsky of Astro Trend. Norm, you want to continue, please?
Yes, sir. We were talking about the lunar apogee-perigee cycle, 25 days. I've given you a link there. If you want, I'll put that in your, sent that to TFNN or to you, Larry, and you could put that in the Tiger Den there. It's a lunar calculator. Give you like a whole year or more worth of apogee-perigee to the exact minute. All you have to do is adjust for your time zone. It's got everything's in general and GMT, Greenwich Mean Time. So here we go. Let's see if we can make any money. There's 302, and the moon was apogee. Let's go look and see what the market is. It's all objective scientific stuff, you know. Right? There we go. There's the S&P E-mini 1 bar, 1 minute bars. That's what I use. 1 minute bars. I like to see a minimum of 3 bars in one direction. We're looking for the extreme. We want the market to close that minute near the high if we're selling or near the low if we're buying. And there you go. There's that. The actual bar is right there. I'm a bad artist trying to point to this bar here. There's a double top there for 2 minutes. And you can see there's the actual data there. Oh, I got 302. Sure, that's right, 302. That's the right time, isn't it? Yeah. Mm-hmm. Yeah, okay. For a moment there, I thought I was off. All right, 302, there's actual numbers there. And we closed at 2822.75, which was in a reasonable amount, about a 1.5 handles or less. Let's see, what was that 20? Yeah, less than 2 handles from the high there, so that's within our entry window. So you would have gone short there, and over the next 4 to 5 minutes, let's see, not 3 minutes actually, it dropped about 12 handles, 11, 12 handles. So you had a chance there to make, nobody's perfect. You're not going to sell at the exact top or by the exact bottom. So I use a trailing stop. I have formulas for this, all tied to the VIX, and so at worst case, you would have gotten out somewhere about there. And I also use a trend line. If you break the trend line, you look to get out, and so you might have got it a little better. But basically, you could have it made about 7 or 8 handles. So that's we'll call it $400 in 3 minutes. That's a little better than minimum wage, I think. So there you go. Better than greeting at Walmart, right? Okay. All right. Yeah, I teach you this system for free. If anybody's interested. I have a free class there every month. There we go. Coming up here now, we got the new moon coming up. Here's the 2 big events coming up this week. The night of the 22nd, that'll be tomorrow night. We got a new moon in Taurus. And so again, we'll round up your usual suspects. That's your financials, your grains, precious metals, cattle, and cotton, because it's in Taurus, the bull. And then at the end of the week, the weekend, we have Pluto in Capricorn turns retrograde. If you, the regular listeners, me being on your show there, Larry, know that that's one of my top things. When the planets go retrograde or direct, and in the one of my early astrology books, they used to say that Pluto takes no prisoners. When Pluto does something, you know it. There's no doubt about it. So this is going to be, it could be a big deal. You got cocoa. Again, you're going to watch cocoa, coffee, hogs, stocks and T-bonds. So keep those markets in mind. Here's the two markets I have not shown a chart yet for because didn't have anything in the past, but we got the new moon in Taurus coming up. So there's your cattle chart. You got to wait another day or so. Cattle right now is kind of going sideways. Not very interesting. We got to get the cows out of the barn there. It looks like the bulls are dozing. Right? There you go. Same thing with the cotton. There's not going to be picking any cotton if it's going sideways. So we got to get the cattle and cotton moving here in the next day or so. We're not going to be doing anything. Okay, so there we go. So it looks like we got some time for questions. If anybody wants to ask me any questions or comments or whatever, I'll be happy to entertain those.
Yes, the question that was being asked is, are you looking at the Bradley model at all when you make these predictions for the stock market or anything?
I have my own version of the Bradley model. When I stumbled on that book back in 1972, I loved his concept. I did not like how he was doing it. He had crazy wide parameters, 15 degrees from one, for aspects and things like that. I like to be very precise. So, so there we go. So I do my own. I've shown it on your show before, my Bradley model. And so there we go. So I factor that into my stock market forecast, but the main thing is it all comes down to just forecast a change in trend, and it keeps things a lot simpler. Just like you got a date, you got looking for a change in trend, and if we go down here now in the stock market again today, and we don't turn around by tomorrow, it's closed, good chance we'll be putting in a low for the new moon. If we bounce up here, reverse and go up into the new moon, then we'll probably be looking for a high. What I like is when we get to the big extremes, like you saw in the hog market there, those are the best ones of all, but we don't get those very often.
Okay.
Here's my contact information there. If anybody like to contact me, go ahead.
Please do. Yep.
Anybody else?
Go ahead, Norm. No, I think that's about it, Norm. We'll have you on again soon. So, keep the doors open and keep safe distance. Are you practicing the usual safety things down there in Naples?
Yeah, I don't go out.
Okay, well, you don't do that anyway.
Don't get around much anymore.
No, you work all the time. Hey, listen, Norm, we're going to have you on again soon. So thank you for joining us today, and live every day in an attitude of gratitude. And God bless, my son. You've done a great job, and we certainly appreciate it. Some of the calls you made last month were truly spectacular, and you certainly have to be very, very proud of what you've done. So keep up the good work. And we'll be watching those cattle as Taurus comes in, because they're certainly ready for some type of a bounce.
Well, you got to get them off the dime there, Larry. You got to wake up the cows because they're going.
Get the hogs right off the trough. I think I got that one too.
There you go. But the cows are going sideways right now, so they got to get going there.
Okay. Listen.
Go ahead.
Thanks for joining us, buddy. We really appreciate it.
I appreciate very much being on your show. Everybody have a good day. Stay well. Stay safe. Stay well. And looking forward to helping you. Contact me right away.
Okay. That was Norm Winski, folk, Astro Trends down in Naples, Florida. Let's take a quick look at some of these markets. They're moving pretty good. I want to talk about the euro just a little bit here, because I believe that, we're heading lower in the euro longer term. We'll get this up here so you folks can take a look at it. As you'll see here, we've had a downtrend since the 16th. Actually, it's been going down more than that, but on the 15-minute chart, you can see it's defined downtrend. We had a really nice Gartley up there at the 61% retracement yesterday, and we had a move just about 80 pips to the downside, and we're looking for we matched this low again this morning, and then we're looking for a little bit of a rally here mid-morning sometime today, and then a move heading down, breaking that 108 level, because the euro still looks, quite, could be quite interesting to see if it gets down. Remember, our longer-term price objectives on the euro are below par, below 100. We've been looking at those for years. So I will put up, that's nothing to have a $16 rally in gold, JAP, because the harmonic number is 34, half of 34 is 17, and that's what it's doing. It's just, these are not big swings like we're having in crude oil, folks. You're talking 1,700 versus 17,000, so that's a big thing. So I will post the June gold Fact is, I'll do that right at this time. And bear with me, 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranked me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, just to review, this thing that's going on in crude oil is caused by one large trading organization over in Singapore. It's the Leong family, E-L-E-O-N-G, and it's the young man, and he sort of hoodwinked his father and didn't tell him what was going on, and that's why he's paying the price. And this will all be rectified today when May goes off the board. May is now trading positive, so that's good. He's not going to be stuck for taking the oil. So most of these contracts will be covered here pretty soon, and you're going to hear more of it down the road because it's a big story. Anytime someone loses that much money in that period of time, it does hit the wires. And it also tells you that, you're not invincible here, folks. If you don't protect yourself, nobody else is going to, that's for sure. So you got to remember, this is a fun business, but when you don't do what you're supposed to be doing, not a good sign, really not a good sign. So always use those stops. They're there for your protection. The mercantile, remember the status of the mercantile, it's the exchange is first, the members is second, and then you're third. So what they're going to do is try to protect you against yourself, and that's why they put in these rules on margins and other things, and they give you 1 hour to make the margin good. But they will not allow you to trade in those spot months coming into delivery. None of the good firms will do that. If they let you do that, folks, be careful, because that means they're not following good common sense, because it can happen to anybody at any time. And when they're illiquid like this, and of course, illiquid, they had 100,000 contracts, so it wasn't exactly illiquid. But what we'll look at here is the fact that it was really watching how these sums, actually move through these things. So we're having a pretty good rally so far this morning. We were down about 600 at one time. We've come back about half of that, so that's a good sign. So we'll be watching these things as we go through, and hopefully we'll be on the air tomorrow with our good friend Stan Harley of the Harley Stock Market Letter will be our guest. He's also one of the perennial winners there of the Timer Digest. He's always in that top 10, along with Tim Bost, who will hopefully have him on later this week too, and maybe even Bill Meridian. 877-927-6648.